This contraction phases here that you see in this box is very predictable. So instead of getting stopped out a lot, watch this video full and I hope this will help you out to improve your trading. So first of all, you need to understand that when using a 1 minute chart and reading structure, we need 5, 10 or 15 candles. So that's 5, 10 or 15 minutes. When you're going to use a 3 or a 5 or 10 minute chart or even greater, that takes 30 minutes to even 1 or 2 hours until you can see a proper structure, and most of all the movement will be gone. So you would need to concentrate on bigger movements with the extreme big stop placement most of the time. So what I love to use is the 1 minute chart and then to read through the structure instead of pulling out the market and then just reading it like this, because this is where people can get very professional into reading, but the problem is they ignore the bigger structure, what causes to stop out a lot. To make it so simple as possible, to understand where the market wants to go, that's the first step. Those are mostly from the bigger structures, the highs or the lows. And because there's this big gap, that big distance, I'm aiming for this kind of high or even this kind of high. This is very important to understand. Once the market starts to make a lot of green candles, I'm going to show this to you. So step number 1, identifying where the market wants to go. If you pull the market together, there's nothing on the left side. So we only have highs to aim at instead of trading here plain inside. Step number 2 is literally to understand once the market does more than 3 green candles or red candles, that it aims for the bigger structured highs or lows. So once the market does here start to make these 4 green candles or 5, as you see here, the market will start to make either 2 things. Either it will go on a contraction phase inside and wiggle a lot around, or it will have enough momentum to push up to the high. So if you're going to look at this over and over again using the same market, it will your experience and your skill will compound. Champions are made out of repetitions, very important, and by looking at it. So instead of just like trading inside and letting the trade run and ignoring it, look how the market is going to do that. You will have results within 2 or 3 weeks by seeing how the market is going to do that, and you will understand that how it is to improve oneself on having specific parts you can concentrate your energy on learning. Instead of learning different kind of things, you now know what to learn on. So what is very important for me is that when I can see the market goes down and does a lot of green candles, to use an indicator that is called the anchored vwap, and you find this on the left side. So step number 1, identifying the highs and the lows, the bigger structured, was what makes sense. Step number 2, once the market does like 3, 4, 5, 6, 7 green candles, to think that the market goes into a contraction phase, or it end either on a contraction phase or pushes up. And then step number 3 is I love to use the anchored vwap. I place it always on the lowest spot or on a mid rotation once I can see the market pushes up. So this is the lowest part. Very important. We can place it higher, but this is too dangerous. I let it on the lowest point instead of trading up here, waiting until the market does a retracement. And when just like entering here after the green candle, check this out. The market does here a higher wick from here to there on the low, only concentrating on the low. I don't care about the highs if the market goes up, only on the lows. So entering here to trade, stop placement under the green candle or there. If I adjust here $100, this will be around $500 of take profit to this small high alone. But as I just told you, I want to aim for the bigger structured highs such as here, or maybe like these kind of highs because there's a distance. It is very unrealistic for me to aim for this kind of high. I'm not just exiting once the market goes there. Once it touches it, I want to see how the candle is closing most of the time. Or like if I can see like pressure against, then I'm going to exit the trade there. So when looking now at the market, we can see that this would have resulted into a stop out, or maybe because having enough experience that the market is not going through this high, comes back in very aggressively to exit here maybe with a risk reward of 1, 2, or 3 only. That will be still $200 or $300 in profit, or a stop out of loss with $100. Now we can see the market pressures out again. If we place here the anchored vwap again, you will see that the market just strikes through and does a lot of red candles, and that means the market is going to aim not for the highs, as I just mentioned, it is going to aim you for the low. Maybe the trader will find you something by placing the anchored vwap on the highest point, trading here something like this, but it is just going too aggressive down. As you see here, it is better from my opinion not to trade down here. Instead, waiting until the market does something. There will be times the market is not going to do something, and there will be times the market will do something. And it's about having a season of no, only trading what is beautiful, what is very important, and what I think for me is good, having enough experience. So instead of trading now here in this contraction phase, what is very predictable, or here over trading there, it is very important to wait until the market goes back to me. And as you see here, the market does here 1, 2, 3 red candles, and this candle is pretty long in reference to others, so this is a lot of pressure. So instead of just buying here within a green candle, if the market wouldn't touch this high here, it is very good for my opinion to buy, but it did. So something what doesn't go above out, as you see here, it spikes inside, like the high. You need to imagine people are selling here, having their stop placement here, and once the market touches it here, as here, and it won't go further up, or here the second time or the third time, this is called a resistance. A resistance is just like from bottom to top, and a support is called from top to bottom. But it doesn't mean for me to trade. A resistance just means like I can see it's not pushing through. I want to trade with momentum instead of just entering here with my real money account. For me, it's more important. Can I see more pressure? And more pressure is this what you see here using the anchored vwap. Once the market goes down here, identifying the candlestick bodies from red, green, you can see red, green goes lower. But here it starts with the wicks. They go lower here in reference as you see here. And here it starts, this wick is going higher and then it goes higher again once it goes lower here. But now check out the candlestick bodies. They go from here to there low, higher. They go here higher and here higher. So this makes here a very good trade, maybe being stopped out with $100 again, or re-entering the trade here and then having the stop here. For me, it's very important to have the stop placement under the anchored vwap. And every time after trading 1 or 2 hours, fully concentrated and making a picture of it by pulling the market together, because when pulling the market together, we can see more that the market goes here, for example, in a half circle inside. It should have pushed here down until this low here, for example, and that shows also weakness, but that may be just a bit too experienced. So just determining when is where does the market wants to go with the highs and the lows, when is the market doing more than 3 green or red candles, and then assuming the market is aiming for that point, not entering right away. If it's against the trend, because we can see here, check this out, the market goes from top to bottom. It's very important to assume that the market goes when it just if it goes down and there's a lot of green candles, either it goes in a contraction phase or it pushes up. So using the anchored vwap can be a very good help. If the market starts, and this is very important, not to go that much in a contraction phase and didn't do it that much before, like here, then we don't need to anchor vwap that much because it won't help you that much placing it here in the lowest part. It is almost impossible, from my opinion, to trade it with very high quality. Here we can see a lot of green candles, and now just taking any green candle. So instead of worrying being stopped out, it is about having 3, 4, 5 entries using a demo account, please, to have the experience, aiming for the structured high, for example, aiming for this high or something, just making sure the risk reward ratio is 5. As you can see here, for example, like that. And then just concentrating on if the market goes up with higher lows, so red and green, we have the candlestick bodies from here, red and green goes higher, for example, or we have the lowest wick from here to there. So again, step number 1, highs or lows. Step number 2, identifying when does the market does more than 3 or 4 green candles, or like in a string, a lot of green candles, more than reds, as you can see here. And the third one is then placing the anchor vwap, especially when it's against the momentum, and then looking forward to take any green candle or red candle, depends on the direction, to trade with the stop placement underneath, as you can see here, to make sure the risk reward ratio is 5. If there are, this is very important, identifying when to use the anchor vwap or not is based on experience. So instead of trading and making an entry here and stop reading this, it is very important for me first to analyze that and to improve oneself. It takes time to learn, but within 2 or 3 weeks doing that and concentrating that just on the S&P 500, for example, on the proper New York time. If you go to the bottom side, you can place here Chicago time, and then from 8:30 a.m., actually it would be better 9 a.m. to 5 p.m., selecting 1 or 2 hours, pulling the market together, and then just like identifying these structures will give you a higher learning curve than just trading in a demo account first, that you understand first how to get a risk reward ratio of 5. And using a demo account first, making quantity, because champions are made out of repetition. This is something what is very important. I see a lot of traders that try to trade so much with quality, that try to go for earning without even having learned 2, 3, 4, 5, 6, 7 months first on the trading strategy. It is more like to use a demo account to understand how to break the demo account brutally, to get more experience with the market until we can reverse engineer and understand what is not that profitable and what works for one trader better. I hope this helps you out. Go to tradewithjd.com/training. You find their videos. I hope these will help you out, make you a better trader. Share this with somebody who needs it. Wish you all love, good trades. JT out.